Take one.
It's all about the habits. You don't want to be dependent. Hey, I don't want to be average. Hey, I just want to persevere. I just want to go and do it, man. I gotta make it happen.
Is this thing on?
Yeah. Welcome, everyone. We're here with the Investor Agent Podcast, and today I have Amanda Sokol. We felt compelled to shoot another podcast. We did one a couple years back, and funny enough, long story short, I saw Amanda on a podcast, and that's how I reached out to her. I said, "Do you want to be on my podcast?" We got to know each other. She was purchasing a building. 2 years later, she just became the seller of the building. I'm now the buyer. So we just had the longest closing ever in 10 years of closing real estate here. It was about a 2-hour closing, but we're now sharing the story. And so welcome, Amanda. Thanks for being on.
Thanks for having me back.
I think a lot of listeners probably, this will go out on your channel, my channel. It's not like we're famous here, but so a lot of people probably already know your background, but why don't you give me and the listeners just a little bit about your backstory in real estate?
So basically, I've been in real estate my whole life, well, adult life anyway. Started when I was in college, worked my way from Philly to South Jersey, then bought single families, then worked my way to apartments. I mean, this is over like 20 years, so it sounds fast, but it wasn't. Now I have like 400 something units. I'm down 40 that are now yours. Your problem.
Yeah, my dad had a saying. He said, "One man's trash is another man's treasure." Yep. And I think that a woman's trash was a man's treasure.
Yes, yes.
I think you wanted to get rid of these. Not to say that they're trash, but I think there was a headache, right? It's been a headache property.
Yeah, it's been a long road for me.
Yeah,
on this one. And a lot of things I did wrong. It didn't come with any
Advil with the purchase.
No,
you didn't give me any Advil.
And, every time I thought it was done, it just wasn't done. So I think you are the 4th or 5th buyer.
Starting to scare me here. They're going to get buyer's remorse.
It's too late now. You can't turn around.
So why don't we go into, because everyone talks about, big success stories, all the wins, and what most real estate investors won't talk about is the level of stress that real estate can cause and how it's just can be discouraging. But, not to be negative, we still, I think, both are grateful for what real estate's done for our lives
for sure.
as a whole. But why don't you talk about some of the challenges that this project had for you guys?
Yeah, so I think off the bat, I structured it incorrectly. So originally I had it with bank debt and then pref equity. And the reason I did it with pref equity was because I wanted to own more. So, when you structure it and you have to raise money, you have investors, you have to share it. I figured, why not just keep half of it? I'll split it with a partner, and we can own half. I'll own half, he'll own the other half. Well, the bank didn't like the pref equity terms, and probably for a very good reason. They're super aggressive. Basically, they can take over control of the entire transaction. So I ended up going with the pref lender as also the debt, which pretty much everyone and their mother told me not to do, and I did it anyway. So it was 100% leveraged at 12 and 15 or 12 and 13%. That escalated.
And this was what, it's a 40 unit building. It was about what, like a 2.6?
I think it was like a $3 million loan.
$3 million loan. Okay.
Yeah. So the construction that went into it, my partner was handling the construction. They did a very poor job on the construction. We had to go in and redo a lot of things that they did, which cost a lot of money. I didn't have a lot of control in that aspect. I think it needed really heavy management, and it needed somebody to be on site a lot. And it was because
you had to turn over a lot of the units. You had to turn over a ton of tenants and renovate a bunch of the units.
And these were tenants that were paying like $500 a month who have been there for like 15 years.
Right.
You know what I mean? They're not willingly going to leave. They have nowhere to go. Where are they going to go for $500 a month?
Right. And it's a hard place to be in too. And you try to work with some, and it's, we talked about, it's like, do you do them all at once? Well, you can't, because it's too much downside. But at the same time, it's hard to do a few at a time because it just takes so long.
You only need one tenant who has cockroaches to get a whole building that has cockroaches.
Yeah,
and
so
I
let's
think,
talk about that $15,000 cockroach bill.
yeah, so it actually, I think 15,000 was just one.
Just 1 month, right?
Just 1 month of cockroaches.
treatment.
So we had to actually, they were so bad that we had to treat the outside. So I've never had to treat the outside of a building before. We had to do the outside, the inside, the basement, all like the crevasses, like everything.
I think I started itching when we started talking.
Yeah, I know. Like I had never even seen a cockroach before I bought this building. So, you have to get the cockroach tenant out, which
Yeah.
in New Jersey, there's only certain reasons you can get people out of a place, and cockroaches isn't one of them. So if they're paying their $500 a month, legally you can't get them out. So it was a journey for sure of that. A lot of pest control problems, a lot of plumbing problems. In retrospect, probably what we should have done was vacate the whole building. And I know you and I talked about that because you did that before.
I did it on an 11 unit, but it's, this particular property, we say it's a 40 unit, but it's 3 buildings, a 24 unit.
Yeah.
And then a 16 unit. And then on a different site, 3 minutes away is another 16 unit, right? So
Yeah. So I think,
Yeah,
16. So I think maybe what I should have done was vacate the 16 unit, done that, then moved on to the next. And then I could have moved tenants from there into the other building. You know what I mean? Just for like the time being while I renovated that. I think that was probably the move. But it was definitely where I went wrong was the structure of this transaction, which is crazy because I was so proud of how I structured it.
Well, in one way, it's great, right? Very little out of pocket, almost, complete ownership between you and your partner, right? And then, so in one sense it is good, but the execution of the deal just is, it was a lot harder than you had anticipated, and the time frame that deal loan, the debt on it wouldn't have been bad debt if it was really short term, but we all know nothing goes as planned.
No.
And things always take longer. It's just
So theoretically on paper, the plan worked, right? And I'm obviously a numbers nerd. I'm, do my pro forma, underwrite to the worst case scenario. I had underwritten the crap out of this deal, and I was very confident that it was going to work. So for it to not work is kind of numbers aren't everything.
Yeah.
It's prior ownership, it's management, it's tenants.
It's a lot of complex moving parts.
Yeah. So it was a lot. So I definitely went wrong there, the debt. And then we decided to list it on an auction website when we got mostly done. And they told us that we were going to get 5.5. Well, it came time for the auction, and everybody's on the phone, and there's 20 people on this call, and no one's bidding. And they're putting in an automated bid, and no one's bidding. And I'm like, this is really bad. Then they're calling people that they thought were going to bid that aren't bidding. And apparently, and I had followed these like sites before, but I think this was like during like 2021 when like rates were different. And I remember like stuff going for like 2 million over what I thought it was.
People just were bidding like crazy.
And here it was that they were requiring a hard deposit, like just off the bat. And I think everybody was scared. They didn't know. They either didn't get to walk the building or they did walk the building. They had just a lot of unknowns. And that 5.5 never happened. And the broker kind of like disappeared. And then we had to hire another broker to sell. And then that deal fell apart. So it was like one thing after another. I try to
keep telling you I'm a real buyer here.
I know.
I've been working on this for a year now.
I know.
Initially, when we were talking about it, I was going to buy into your existing partnership. Yeah. And then part of the reason why it didn't make sense is once we got into the way your debt was structured, I was like, I can't get into that, and then come full circle, you sold it to another buyer that was higher than me and they didn't deliver. And now we finally just closed it.
The morning of closing, by the way.
Oh my goodness.
Yeah. So it would be like this morning with them backing out. It was like 7 a.m. I got an email from their attorney.
On a scale from a 1 to 10, how stressful has this deal been?
So I want to say that I'm a person who manages stress very well.
Yeah.
It takes a lot to rattle me. I'd say given the partnership structure and the collateral involved. So I did cross-collateralize, which I forgot to mention that, which is really important. Because the first deal that I had that was going to close, I had another closing that was supposed to be like a week later on just like a single family house that I didn't want anymore, but that was collateralized. They were people that were buying it as their primary residence, and I had to cancel the deal because it would have all gone towards the loan.
So you couldn't sell your other property because it was tied up because they cross-collateralized the debt onto
I think like $4 million in assets.
Yeah.
Yeah.
So it really tied up a lot of other things too, right? Because that could have freed up cash. That,
a lot of my headspace too.
Yeah.
So on a scale of 1 to 10, I'd give it like probably like a 7.
Yeah. And as what are your biggest takeaways like moving forward? I know for now you're shooting a TV show. Amanda's always brokering some crazy capital deals and doing different things, higher paying activities with less stress. But, in terms of your real estate learning experience, I'm sure you've had some great lessons in this too, because the failures aren't really failures. They're just learning lessons. And it's like, not to do it again, obviously the debt, but
I
the
think
partnerships structure,
I think, is important. And then I don't think I'll ever cross-collateralize anything ever again. I'll personally guarantee any loan. That I know. I know I'll always pay something back. That I know.
But don't tie up other projects.
But tying up other stuff to it, you never know what's going to happen on your other projects. And when you need the money or whatever, something gets hard to manage or it needs a new roof and you just want to get rid of it. Like, you don't have anywhere to pull the money from. And I think,
and with your portfolio has a lot of single families, which it's great to be able to like peel one off and sell it, or and when you tie up other properties, it prevents you from doing that.
Yeah, so I would never do that again. Mm-hmm. That was
good thing I didn't do that.
Yeah, don't do that. I know when your lender was there, I was like, I hope you didn't also.
Well, your debt was close to what, like 12%, 15%,
and it was accrued.
Yeah.
So
was it? Do you remember how? I know it was like a little complex structure where there was senior lien debt and then pref in there.
Originally, I think the loan. Well, so it was 100%. So it was supposed to be $1 million in construction and then the purchase price.
Gotcha.
But they didn't release the second half of the money, so it was $500.
Right, and that stalled the project because then you couldn't finish it. And since it wasn't fully stabilized, you couldn't sell it to the right type of buyer. It's also, it's a big enough building that your typical mom and pop investor is not really buying that, but at the same time, it's not big enough for an institutional buyer. You're kind of in this middle ground.
Yeah, you have this pool of like some qualified people, some not, and some brokers, like it's not in their wheelhouse. Like South Jersey has a lot of those.
Why did I buy this again? No, I like it. I mean, to me, this is not like a huge value add in terms of, like, there's definitely some forced value add, but it's just a buy and hold long term. I think it'll be a cash flow.
The location's great.
Yeah, over time, it's and
the units are small.
I got some pretty good debt on it.
Yeah,
80%
you have good
value,
debt, and
6.3% interest. That's not bad in this environment right now.
I think because they're small, I think it doesn't cost a lot to renovate them.
No.
So I think and you don't need to do a crazy amount of upgrades. I don't know. Are you taking the ceilings and stuff down, the popcorn ceilings?
We're like unit by unit. I mean, we'll see.
Okay.
So, all right. So going back, because I really want anyone that's listening to get value. What are some of the other things that you feel like really helped you along in your journey? Because, you scaled up to about 500 units.
Yeah.
I know you sold this 40 units and then another 40 unit building.
Yeah.
But that's a substantial amount of real estate for someone your age without inheriting a ton of money and, learning how to scale this. It's pretty impressive. So what are some of the skill sets that you feel like are so important for newbie investors and anyone that's maybe got their feet wet, but they want to scale, to that level? What are some of the things that they should really learn?
So I have like a general rule of thumb that I don't ask anybody to do anything that I don't know how to do. And I think that's so important with this line of business as far as construction goes. Like, if you don't know what's involved with, replumbing something or putting a roof on, like, you have to assign a value to that. And I think knowing your construction numbers is so important. What things should cost per square foot. If you're doing sheetrock, like what flooring should cost, what flooring install should cost. Like knowing if you're going to put carpet in there, like what do the tenants, what are tenants looking for? I think that's super important. Construction, knowing your numbers and knowing your rents. So you should be touring other buildings, right? Like touring buildings in the area. Are the units smaller? Are they bigger? Do they have amenities? what are they getting for a one bed? A one bed across, multiple towns should give you a good idea of where you should be. And you never want to be the cheapest one bed, because then you get everyone, or the most expensive one bed, because then you get all the tenants that were rejected from all the other buildings. So you want to be like kind of middle ground and have a very clean, just safe place, right?
Yeah.
But like emphasis on clean.
Yeah.
Like,
So putting this building aside, because I know that's like we were talking a lot about that and a lot of what you're saying, just in general, like what are the main skill sets that you need to develop as a real estate investor to scale to 400 or 500 units? I mean, it like for me, it goes to raising capital, finding deals, and then operating it, like the management piece.
So I've never had trouble finding deals. People say that to me all the time, and I'm like, I find deals all the time. So I can literally look in like the MLS and find deals.
Find me some deals.
Yeah, I will. I missed that part, actually, the deal hunt. I don't get to do it as much, but I think definitely knowing your numbers, I guess deal structure. Like, do you want to raise capital? Is that what you want to do? Do you want to partner? I kind of think the easiest way to go at it is just to have a money partner. Like, if you have a money partner who wants to just kind of be like an LP type role where they're just kind of in the background, they don't really make any decisions, you just make them money. I think that's probably the ideal partnership.
And that helped you a lot, right? You've done several structures like that where, you bring in a capital partner and you're the operator, you find a deal and run it.
I've kind of structured a deal every which way at this point.
Yeah.
That's my favorite way because I feel like I have the most control.
Yeah.
So I have the contract.
Because a great deal that doesn't get executed on turns to a bad deal really quickly.
Yeah.
I mean, it's kind of what happened in this one. And not that you're a bad operator. It was multiple layers of things that happen in that specific transaction. Because I've seen other stuff that you've done and it's, you do great with it, right? So you didn't get to where you're at by not delivering. It was more just the
this
control
was a lot
piece.
Of management.
You
and
gave
then
up a lot of control with the way it was structured.
Yeah, and then the debt being so expensive.
Right.
So I think, knowing construction, knowing your numbers, and then knowing how to like structure a deal, figuring out, do you want to have higher debt? Do you want lower debt? I feel like we're going to see the return of the lower leverage investor.
Yeah.
Like, I think people are going to be scared.
It has to, right? Like, I mean, you almost need it for for the numbers to work. When you could go 100% leverage and the rates were low and the cap rates, when there was room there, now there's not really a ton of room. So you have to have the skin in the game and you have to have some money sitting there as part of it.
And if you talk to like the OG guys from like the 80s, they're big on low leverage.
Yeah.
They all don't want to be over leveraged because they've all seen it. Like they've been through the wave and they've rode it out and they're like, don't do it. So I think we're kind of coming back to that.
Interesting how real commercial underwriting criteria hasn't changed all that much. It's just people started getting super creative with deal structure.
Yeah.
But, if it's 30% down, a certain DSCR coverage, then there's room in the deal. Right.
Yeah.
So,
and like the pref equity piece that comes in behind like the Fannie Freddie and all that, like that's really expensive.
It works if the deal's incredible and everything goes smoothly, but it can get just too much.
Yeah. So I think like picking a path of what you want to do and then just following it, I want to do Class C, Class B value add. And then you go that path. How are you doing that? Are you raising capital? Are you need to learn the construction. You need to know what it's going to cost to turn over a unit. Mm-hmm. Is really your number one thing. And then can you change your OpEx? Like, what expenses can you trim down? Is there room there? I think that's also really important. But yeah, I think when I make my grand comeback, I'm going to go Class A.
Yeah.
I think.
Quality over quantity, right?
Yeah.
Still do big quantity. One thing I wanted to talk about, which is kind of off topic, but just being a woman in real estate investing, not that there's plenty of women investors out there, but it has been in the past predominantly men, I'm sure. What are some of the pros and cons of that? Because you've obviously used it for your leverage with, like just being standing out in the crowd, so to speak, right? Like if you're not bold in this world, then you kind of fall in the background. But I think, you have such a big online presence and have created a good reputation for yourself in the business. Just why don't you just share your story in that and like how that, how that came about?
I grew up in construction, so I think like I'm not intimidated by really, like if my dad's a contractor, I was treated like a contractor on the job. Like he would literally bring me to work and put me to work. So I was around like older men who were like yelling at each other. Like, I don't know if you've ever been on a construction site.
Oh yeah.
They do not treat each other
well.
well.
My dad was a contractor
okay,
too.
Yeah, so they don't treat each other very well. They're very like, they're screaming at each other,
Yep.
throwing stuff. So like that was what I was used to. And I feel like what that did to me as an adult is it made it so like, I'm not really intimidated by anyone, right? Like I can
You are
walk
pretty fearless, I will say.
yeah, like I can walk
in.
into a room, sit next to somebody who's like a billionaire or sit next to a contractor. I don't really care. It's the same to me, right? Like,
That's how it should be. We
Yeah,
should
that's
treat
how it
all
should be.
people the same, right?
but like you should be able to talk to
absolutely.
anyone.
Not be
right?
intimidated.
Yeah, so I'm not intimidated. Like I think even when I was sitting there, I was like, oh, let me shoot my shot at this deal. I had
Right.
that one. I couldn't even remember where it was. I had to like remember. I'm like, wait, who was that?
Yeah.
But like you have to be willing to like have those conversations and not be scared. I mean, what's the worst that happens is they say no. Like me and my friend Allison, actually, we did the women's event. So I hosted this event. It was women raising capital.
I think it's so awesome that you're doing that because it doesn't take much for someone to see, oh, someone else can do it. But I
Yeah.
do think it's different when it's, a woman looking at a bunch of men doing it. There's an additional layer of intimidation.
Yeah, it is.
Right?
It's intimidating. It's intimidating to talk to lenders. Like I don't think lenders realize how intimidating they are, but they are intimidating, and you're asking them to give you money. So it's like a weird conversation, I think, like for men and women, but I think women are intimidated to have those conversations. So the whole point of the event was like, listen, like we'll make these introductions for you. Like you can have the same conversations, but like you have to put yourself out there. Because I thought that women weren't getting loans because they were getting like denied, but here they're not even applying. So I'm like, there's like a bigger problem.
Not even trying.
Yeah.
Right.
And it's because they don't know where to go. So I'm like, if I can be like, the voice to help even a couple women.
It's amazing.
Yeah. Then I feel like I would love to really take like a young group of girls and like help them invest like even in their own town.
Oh, you're going
or
to do that
something.
now. So
Yeah.
you said it.
'Cause I
You've
said
spoken it out into
I said it.
existence.
But, well, that's what I would like to have like a fund that does that eventually, at some point, or like mentorship or something. But I haven't figured out the piece of like, how do I get them the loan? Because really I have to be on it, so there would have to be something, I don't know. I had talked to one lender about it. They're like, maybe we could JV it. They were trying to figure it out.
I have faith you can figure it out.
Yeah, I know, another structure thing. But yeah, I think like it's definitely, it's helped me. I'm sure it hurts me, but I don't really pay attention to it.
So another thing I want to talk about too, because I want to kind of tie this back to when we first met, and I know your one big goal was to build a skyscraper, right?
Okay.
And I just want to talk a little bit about how like we always have our plan and then the plan and how things change, and just share a little bit about how, I know you a little bit, right?
Yeah.
It's just like off camera, and Amanda she's always doing way more than I would ever imagine. She's shooting films and brokering big deals. And I don't even know if everything she's saying makes sense or what it is or understand it, but
it all fits together,
it's
I
all
think.
very inspiring. And I'm like, okay, it's just more entertaining, right? So, number one, do you still want to build a skyscraper?
I don't think so.
No. And where do you like looking back and reflecting on that big, what do people call it? What a BHAG, big, hairy, audacious goal.
Yeah.
What do you think
never
was
heard that before,
driving
but-
that? Oh yeah, the BHAG. What's your BHAG? So I think it. You obviously wanted to build something substantial, right? And you've built a big portfolio, but
I think I
looking
wanted
back
to
on
prove that I could do it.
Yeah.
And I would think I wanted to leave something that I knew could never be taken down. Like I did that.
Something permanent.
Something permanent that, I mean, if you think about it, there's only like a handful of people that have done that, right? When you think of like real skyscraper, it's not an easy thing to do.
I always used to want to build a bridge. This is why I'm kind of digging in on this conversation.
So yours must be to take you from one place to another.
Yeah, maybe.
But mine is permanence apparently.
Yeah.
So.
And I think behind that, like you said, you want to prove it. It's not. I don't think it's
to myself,
somewhat
not
from
no
an
one
ego
else.
standpoint, but
Yeah.
I think it's because you really want to be an inspiration and make a difference for other people. That's what I see in you. I mean,
Yeah,
the layer
I think,
behind the layer, if you peel it back a little more, where even just the fact that you want to take a group of girls and help them get started and, financing and help them get, loan approvals and access to capital on deals. It's not, I just know the way you are. It's not about you accumulating all this. And then, so I think it's important to understand the motivations. And I've seen that in you. I wanted to highlight in that in this conversation, but also not tell you. I want to hear it from you.
Yeah. I think something in me changed though, like recently, where I was like, I just don't want to do that anymore. And I was like, all I really want is like calm and peace.
Yeah.
And to me, skyscraper is the opposite of that, right? Like I would probably have the most stressful, like difficult 10 years of my life, because that's probably how long it would take, and do I want that? No. I don't think I do.
Yeah, I think that's just some wisdom kicking in and thinking about what's really important and, how do you have that same level of impact in ways that aren't as stressful.
Yeah. Like, I mean, if you ever read that Billionaires Row book.
I haven't read it.
Okay. So, I mean, talk about the most stressful. I mean, a lot of them are condos on like, Fifth Ave or around Park Ave, whatever it is in New York. And I just stressful, awful, difficult transactions that are like never ending lawsuits and like, and it's what drives them, right? Like what is the driver? I think about that every time I have a conversation with somebody, is what's driving them every day. And
I'm always fascinated by it.
Me too.
I was with my mentor the other day and his real estate fund is approaching $2 billion in assets.
And he keeps going, right?
Well, he's out of it. I mean, it's snowballing without him at this point, but he's still educating himself. He's still going to events, networking. He became a CEPA, which is a certified exit planning specialist. And, I asked him that in the interview, and it really came back to his ability to impact others.
Okay.
Right. So that's like the common thread that I'm always trying to highlight in these conversations is like, I believe, when you look out in the world, it does look like dog eat dog, just everyone's out for themselves. But if you peel away a lot of the BS and the ego, I think most people want to make a difference. Yeah. And they're just trying it in different ways. Obviously, if you don't have your own needs met, you get thrown into that like scarcity mindset, and that drives people. We've talked about this, the scarcity versus abundance. But I think when people are coming from that abundance mindset, it really, if you look at it, what's behind that, even if they might look crazy because they have this huge portfolio and they want more. But I think it's also because they probably have big dreams for their charitable contributions or, setting up a foundation or helping a group of people. There's usually some sort of major drive behind that.
Yeah. So. And I think a lot of it too is like winning, but it's not really competing against other people. It's like winning for yourself. Yeah.
You want to feel progress. Like you just want to feel like you did better today than yesterday.
Yeah. And I think like that's what I've noticed is like a theme is not only like helping people, because I feel like a lot of people at the top definitely do that, but a lot of it is like winning. It's never money. Like if you ever talk to
the
like
money's not that exciting.
No, it's not actually, and it won't keep you going.
That's just the carrot that looks exciting, but it's the winning the deal. It's winning the negotiation, whatever it is.
And most real estate investors, even the ones at the top, live very thin, right? Like they never have a lot of cash in the bank, ever. I mean, when I was a broker, I would see people's PFS, and I was like, seriously? You're worth like $100 million. You have like $50,000 in the bank. Like crazy stuff.
And, there's that cash is trash saying, but that's not really true. It's nice. It's nice to have some liquidity, and it helps with bumps in the roads. But
I don't think I'll ever do that again. Like I'll never live that thin again.
Yeah. It's not serving
scary.
Anyone.
No, and it's scary, and it's not worth it.
Just to get a little further,
Yeah. No. So, no more skyscraper for now. Maybe I'll return back to it, but.
So we're kind of almost towards the end of our time here, and I want to make sure if you had anything else you want to leave with anyone in terms of last words of wisdom.
My God, I feel like it's been so much. Definitely choose your partners wisely, for sure. Make sure your goals are aligned. And, definitely get cheap debt. As cheap as you can. Yeah. For long-term holds anyway.
Awesome. Well, thank you for sharing. And I know this conversation went in many directions. Hopefully the listeners found some value in it.
It's like two people with ADD are like, hey.
That's all entrepreneurs, right? So just got to embrace it.
Yeah.
All right. Thank you.
All right. Thank you.